Hey guys, welcome to my daily market report, and this is Mike here. And as you can see here, we got a few economic data here on the calendar, so we'll just jump right into it. So the first item here is the CPI report, or the Consumer Price Index, for the month of January. This is a month-over-month one here, and back in December we had a 0.4% increase. However, it was revised a little bit lower, down to 0.2%. Now, forecast was calling for 0.3%, and it came in expectations at 0.3%. However, we're going to also look at the more important data here. We're going to look at the core CPI, and the core CPI is when you strip away food and energy. Now, this particular index, or this report here, is showing the year over year. So the previous report back in December was 1.6%. Fed has been wanting to get this up to about the 2.5% range. However, forecast is showing a little dip down to 1.5%, and it actually dipped further down to 1.4%. So we're getting a little bit further away from the target range that the Fed would like to have, and markets, I'm sure you'll see, will act accordingly. Now, last but not least, we also got the wholesale inventories month over month for the month of December. So in November, it rose only 0.1%. Forecast calling for 0.1%. However, in December, wholesale inventories increased at 0.3%. So showing a little bit more promise going into the new year here. So let's jump ahead here and take a look at what the headline news is showing. Stocks are down. We're still kind of looking at the data here. Inflation was tame, which is obviously good news, especially for yields, because inflation is the enemy of bonds and yields, and that's kind of helping things out a little bit. So speaking of such, we're going to jump ahead here, take a look at the mortgage rates and what's going on over there. As you can see here, we did touch base higher. We are lower on the roll on the chart here. However, we had what they call a rollover. So what does that mean? The coupons that were for February are already in the were packaged and then basically ended. So we do a reset on the pricing, which has no effect on our mortgage rates. But now we're starting the coupons for the 30 or for March. So this is what's going on here. So it'll show a little bit lower, but however, we're actually only down. We're actually up about 6 basis points currently, but we were up much higher. If lenders came out earlier with better pricing, they may have slid back a little bit, worsened a little bit, or maybe just kind of holding to see if it rebounds a little bit. But in any case, don't be fooled by what this misleading. We were actually up about 6 basis points from where we left off yesterday. So we would actually be, probably up around this range a little bit in reality. And we probably would have been pretty close to this 100-day moving average with this tip here. Let's look at yields. Yields have dipped down a little bit as well. As you can see, we started to eat higher, and then we've come down a little bit, broken through this floor of support, approaching the next floor of support. Just under 1.14 at 1.136 currently right now. So right now, I would say mortgage rates are about where we left off yesterday, where we closed. So yields are unchanged, or mortgage rates are unchanged at this point. If you guys got any questions about where mortgage rates are at, where I think they might go, or if you guys got any questions in general, whether if it's more about the process of buying and refinancing, I'd be more than happy to help you guys out. A little bit about myself: I am a loan officer, and I do work with a national lender. I'd be more than happy to answer any questions you guys may have. So please feel free to reach out, and you guys have a great rest of the day, and we'll see you in tomorrow's video. Bye bye.